Ozan ÖZKURAL joins us, managing partner at Tanto Capital Partners, and you're looking at the lens of emerging markets.
Right.
Just give us a sense of how you feel that these assets will fare over the next couple of weeks and months because of coronavirus fears and the impact on these economies.
I think it's fair to say that to take a one-size-fits-all approach is not correct at the moment because the EM space is hugely diverse when it comes to the exposure to oil production, consumption, current account deficits, so on and so forth. But
That's
I think
been the case for many years. Investors have been
exactly,
picking assets.
absolutely. But I think one thing is for sure, in that in order to deal with this coronavirus COVID-19 case, we can expect more fiscal stimulus coming from Europe and basically the US, which means that we're going to be in the negative yielding asset territory for a long time to come, which effectively means that investors, to be able to get the yield enhancement that they're looking for, they have to go down the credit curve, they have to continue risking up, which effectively means they have to kind of pile on partially to emerging market assets. But in this case, I think we're going to face a much more significant selection process, if you will. So for example, countries that have a heavy dependence on the tourism sector are going to get hit. Countries that have more of a local innovation hub is going to probably fare better. Countries that have a much more of a mixed economy and fundamental manufacturing facilities within the emerging markets will probably attract more of the flows that are coming EM's way.
What's the relevance of the US dollar trade at this point? Because we've seen some gyrations in the dollar, which has been an all-weather currency, a stronger bet for a lot of investors. But over the past couple of weeks, we have seen just a little bit of instability creep into the dollar. What impact would that have if it continued?
Well, within the emerging markets, predominantly a lot of the EM debt stock, I think, is in dollar. A lot of the EM issuers do tap the fundamentally the long end of the curve, which is in the US capital markets. I don't think it's going to have a huge impact on issuers vis-a-vis the capital markets at the moment, but it very much depends on what their cost of borrowing is normally denominated at. I don't think the dollar is going to impact the borrowing so much. If anything, countries and companies and corporates within those countries could end up finding this potentially an opportunity to go a little bit longer down the duration to tap the markets. Just because compared to, for example, the old days, banks have much smaller balance sheets. There's a lot of cash sitting on the buy side balance sheets, a lot of liquidity in the market. So as long as you have a captive economy to be able to place that funding, I think EM issuers may find it perversely not a bad time to try to look at going in the long end of the curve.
How do you see the effectiveness of fiscal policy playing out in terms of transmission mechanism? Because monetary policy is run by proven technocrats in central banks. They are also globally coordinating always. Fiscal policy is very much national, very much in parliaments, with governments. It's a political process. And as a result, typically, it's kind of lagging and pro-cyclical. So where do you have any optimism there that it can contribute to the crisis management?
Well, you know what, I think that's a really good question, in that we are, first of all, living in a world that is unfortunately, much more polarized when it comes to local politics. So I don't expect anywhere close to a coordinated response to this, as we had, for example, in 2008, just because we live in a different world, unfortunately. When it comes to which countries, I think Germany is going to be a country to kind of watch out for, because we also don't have as much scope as we did before to be able to tackle this crisis. I mean, certainly not with monetary policy, but also with fiscal policy, you have limited room. So I think the policy response, like you said, is going to be very haphazard, and I don't expect as big an impact as we had gone through in previous years. I just think that we're going to have a lot of volatility in the market.
Okay. Beat's very worried about liquidity, and liquidity specifically in the credit market. If you push me into emerging market debt for yield enhancement, aren't we doubling down on that? Because not only am I in the bond markets, but I am in the emerging bond markets, where the likelihood is it'll be even harder to get out of those positions.
Well, the thing is, again, and this is where selection comes into play. Again, the EM space is such a broad brush to kind of say, well, let's just do EM. You want to target those countries and those firms and banks that have a relative liquidity within the EM space. The reality is we have to risk up. I mean, you can look at Brazil, maybe to an extent, in a smaller scale, Colombia. Turkey is a natural, although Turkey is plagued by its own geopolitical problems right now, and obviously it's no longer rated investment grade, so you're not going to have it as much liquidity as you did before. But the reality is, if you take a look at the world overall, and we have to risk up. I mean, we are stuck between a rock and a hard place if you think about it, right? So an element of illiquidity is going to be the kind of thing that we have to start living with if you are going to have some sort of a yield enhancement, especially because I think in order to prepare for a prospective correction, even before the COVID-19 case had become prevalent, we were kind of analyzing the market and saying, look, we live in extremely fragile markets. I mean, extremely fragile world, socially, economically, geopolitically. So how does one position himself or herself for those markets? You increase your liquidity on the cash side, so you're waiting for a correction and you want to be protected for it. You are trying to pile onto the liquid, high-quality assets, which is mainly dollar-denominated in the US, but you haven't got enough stock for that. You have to compensate for the negative carry somehow. So I think a part of the portfolio will be illiquid assets, and we all have to get used to being able to price the risk, which means you have to understand the risk, which means you have to be on the ground really cherry picking.
Thank you so much for dropping by to see us today and sharing your perspective. Ozan ÖZKURAL, who is the managing partner at Tanto Capital Partners.